Welcome to the deep dive. Today, we're really digging into a mix of sources covering the market, specific stocks, and what looks like a really pivotal earnings week starting August 4th, 2025. Our goal here is simple: cut through the noise for you so you can quickly get a handle on what's actually driving the financial markets right now.
Yeah, it feels like we're at this precarious crossroads, doesn't it? You've got these worsening economic fundamentals, the actual data points, but then there's this incredibly strong pull, this anticipation of more central bank stimulus. It really is that bad news is good news kind of market we've talked about.
Exactly. Negative data just fuels hope for Fed action, boosting stocks. So let's break down what this means for you. There seem to be three big forces really shaping things this week and honestly creating a bit of unease.
Okay, first up, the tariff reality check. Look, that August 7th implementation of new U.S. tariffs, it's not some far-off thing anymore. It's here. It's imminent. And these aren't minor. They're broad, hitting over 90 territories with rates from 10% all the way up to, 41% in some cases.
And we're already seeing the direct impact, right? I mean, Apple's explicitly saying they expect a $1.1 billion hit just this quarter from tariffs. Plus, big names like Walmart, Nike, they're warning about raising prices. So those costs get passed to you, the consumer. It definitely brings up that whole stagflation worries, slow growth, high inflation. Not a good mix.
Not at all. Then the second force is the Fed's forced hand. That July jobs report was, frankly, shocking. Only 73,000 jobs added. The expectation was 100,000. And worse, the previous months got revised down massively. We're talking 258,000 jobs wiped off. This just completely changed the game for monetary policy. A rate cut was almost inevitable now.
Yeah, that data just flipped the switch. Yeah. September rate cut odds jumped to, 84%? And the market's now pricing in like 2.26 quarter point cuts for the whole year. But here's something else interesting, maybe a bit concerning. The report mentioned presidential action against the BLS head, aiming for more transparent data. You have to ask, what does that do for market stability? Doesn't that create a pretty serious credibility risk when, trust in these independent institutions is so key?
That's a really important point. Trust is foundational. Okay, third force. The earnings gauntlet. It's a packed week for corporate earnings. This is where we get the ground level view, right? How are companies actually doing? So far, the season's been okay. 82% of S&P 500 beating EPS estimates. But can that strength hold up? That's the question.
Definitely. And Monday brings a big test right away with Palantir, PLTR, huge bellwether for the whole AI theme. I mean, trading at 250 times forward earnings, that's stratospheric, leaves zero room for disappointment. So commercial growth, CEO comments, absolutely critical. Options market expects a nearly 17% move. Huge. Also, Tyson Foods, TSN, reporting Monday. That gives us a read on the U.S. consumer, watching margins there, segment performance.
And reflecting all this uncertainty, look at the sectors, all 11 GICS sectors. Rate and neutral market perform. Tells you something. Friday definitely saw a move to safety. Utilities, the classic defensive play, were up a bit. But cyclicals like materials, consumer discretionary, they plunged.
Yeah, and that AI and semiconductor space, still powerful, obviously, but you're seeing pressure now. Pre-market Monday, NVIDIA is down over 2%, AMD down over 2.5%, and interestingly, really high volume in the bearish semiconductor ETFs. So you wonder, could this be setting up as a bull trap? High flyers, stretched valuations, vulnerable if they miss expectations.
It's possible. And look at the divergence within cloud. Microsoft Azure posts, 39% growth? Yeah, spectacular. Seems to smooth over everything else for them. But Amazon Web Services, AWS, grows 18%. Now, that's still really strong growth, but the market saw it as miss. Amazon stock plunged 8% pre-market. Shows how high expectations are.
And one more specific catalyst. Reports that Beijing is restricting critical mineral supplies, specifically targeting Western defense firms. That's got clear bullish implications for miners outside China, like MP Materials. They just got upgraded to buy on that news.
So yeah, connecting the dots. The week ahead feels like a classic market tug-of-war. Bulls are banking on Fed help and hopefully strong earnings continuing. But the bears, they're pointing to real tariff costs hitting soon. Clear signs of a slowing economy. Look at volatility. The VIX closed Friday over 20. That's elevated.
So wrapping this up for you, what's the takeaway? Given everything, maybe a neutral, possibly even a bit defensive stance makes sense right now. Might be prudent to think about trimming some of those high-flying momentum stocks, the ones that are really vulnerable if sentiment shifts quickly.
And it leaves us with this crucial question, doesn't it, in this weird bad news is good news market.
Yeah.
How long can that actually last? How long before the fundamentals, things like tariffs biting, real economic slowdown really take back control? Definitely something to keep in mind as you navigate the week.